Industrial demand for silver continues to soar, which will likely impact its price. On the other hand, physical investment in silver dropped by 28% year-over-year. What does this mean? Let's dive into the details. We're going to review the World Silver Survey 2024, which is published annually by the Silver Institute. This comprehensive 92-page document contains a wealth of information, but I'll focus on the highlights to keep it concise. If you invest in silver, stack silver, or are concerned about silver prices over the next few years or decades, there's a lot of valuable information here. To start, for the third consecutive year, silver demand significantly exceeded supply in 2023. Although the global market deficit decreased by 30% year-over-year from the likely all-time high of 184.3 million ounces in 2022, it was still one of the largest deficits on record. This deficit occurred alongside sharp declines in bar and coin investment, jewelry, and silverware demand, leading to an overall decrease in global silver offtake. Despite these pressures, the silver market's deficit conditions have remained resilient. Last year, silver prices didn't change much, even though a substantial amount of silver was withdrawn from reserves. The market deficit was significant, but we didn't see silver prices start to rise until this year, 2024. This report essentially recaps everything that happened last year. Let's take a quick look at silver supply and demand. The top part here shows the supply from 2015 to the forecast for 2024. The supply has been roughly 1 billion ounces of silver each year. In 2020, there was a slight dip to 957 million ounces due to COVID-19, but overall, the supply has remained consistent at around 1 billion ounces annually. When we look at demand, it's been increasing over the last few years. Starting from 2015, demand was around 1 billion ounces, then it dropped to 900 million ounces for several years. Recently, it has risen again to 1 billion ounces and has now reached 1.2 billion ounces annually. This means demand has outpaced supply for several years, and it appears to be on an upward trend. The chart on the left illustrates global demand for silver by sector. Industrial use consumes the most silver, followed by investment and jewelry. This is why silver is often referred to as an industrial metal. Most of the silver mined each year is used in industry, which primarily drives its price. When examining supply and demand trends across sectors, industrial demand increased last year, while investment sharply declined. This drop in physical silver investment can be attributed to several factors, such as Germany's imposition of a silver tax, leading fewer Europeans to stack silver and opting instead for gold. Additionally, most other Western markets experienced significant declines due to factors like rising living costs and stable silver prices. As inflation rises and household financial pressures mount, investing in silver becomes less feasible. The global supply forecast for silver in 2024 remains consistent with the past decade, indicating stable mining outputs. Claims of silver mines depleting or needing deeper excavation, as sometimes suggested on platforms like YouTube, are unfounded. Silver supply remains steady. It's the demand side that experiences fluctuations and changes. Industrial demand is expected to rise by 9% this year, reaching a new record high. This surge is driven by the booming demand in sectors such as battery electric vehicles, hybrids, and photovoltaic installations, solar panels. While light-duty vehicle production shows no significant growth prospects, the adoption of electric vehicles and solar technology is skyrocketing. These sectors are the primary drivers of industrial silver demand. Turning to physical investment, which involves individual investors known as stackers, there was a notable shift in 2023. After peaking in 2022, physical silver investment plummeted by 28% last year to a 3-year low. Major markets, including Germany, India, and Australia, saw substantial declines exceeding 30%. In contrast, the United States experienced a more modest decrease of 13.3%, maintaining historically high absolute volumes. Breaking down the numbers by country reveals intriguing insights into investor behavior. In 2023, the United States saw a significant decline of 13.3%, while India and Australia experienced drops of 38%. Germany, heavily affected by a VAT change, recorded a sharp 73% decrease. Canada also saw a decline of 35%. Interestingly, China bucked the trend with a 7% increase in silver purchases, indicating robust demand among Chinese investors amidst global fluctuations. When examining coins and metals fabrication, this refers to the production of silver eagles or silver maple leafs, detailed by country. In 2023, there were notable changes. China increased by 5%, while the United States surged by 38%, notably boosting silver eagle production from 21 million in 2022 to 29 million in 2023. This increase contributed to lower silver eagle premiums last year, which remain relatively low this year. Regarding above-ground silver stockpiles, the short answer is no, we are not running out of available silver presently. However, there has been a notable shift. From 2021 to 2022, there was a significant drop in available silver, though from 2022 to 2023, the decrease was only 5%. While the LBMA in London reported more silver in 2023 than in 2022, overall stocks are gradually diminishing. Looking at London Exchange Vault inventories, there was a substantial reduction, with a chart showing a decline from 1,800 million ounces to 600 million ounces, albeit the depletion rate is not currently rapid. Among the top 20 producing countries mining silver, Mexico leads by a significant margin, producing nearly twice as much silver as second-place China. In contrast, the United States ranks ninth, with only 32 million ounces mined last year, highlighting a lower production contribution compared to Mexico, China, and Peru, which are key global producers. Now, let's focus on one of the most crucial insights from the World Silver Survey. Pay close attention to this point, it's pivotal. The primary production cost of silver is on the rise. They detail the total cash cost and the all-in sustaining cost to produce a single ounce of silver, from extraction in the mine to its final form. In 2022, the cash cost was $5.19, but in 2023, it surged to $8.38, marking a 61% increase. This cash cost represents the bare minimum to keep operations running, covering expenses like worker salaries and diesel for transport. Additionally, the all-in sustaining cost per ounce hit $17.18 last year, up 25%. Essentially, this sets a critical threshold for silver prices. If the market price dips below $17.18 per ounce, mining operations become unprofitable. In such scenarios, companies are likely to withhold silver from the market, anticipating a future price rebound. This underscores why $17 is considered a significant bottom for silver, below which sustained market prices are unsustainable for producers. The global industrial demand for silver continues to surge and shows no signs of slowing down. Unsurprisingly, China leads the pack with a remarkable 57% year-over-year increase in silver consumption for industrial purposes. While other countries show minimal changes, the global total has risen by 20%, driven significantly by a staggering 64% increase in the use of silver for photovoltaic applications, such as solar panels. This trend suggests that solar panels could become a major driver of silver prices over the next decade. Share your thoughts in the comments below, and remember to like, subscribe, and hit the notification bell for more updates. Thank you for being a part of our community.